In today's market, finding reliable dividend stocks with yields over 5% can be challenging, especially with the volatility we've seen in recent years. However, some companies stand out for their ability to maintain or even grow dividends while providing strong yields. Whether you're looking for income, reinvestment opportunities, or just solid investment options, dividend stocks with yields over 5% can be a great choice. In this video, we'll count down the top 10 dividend stocks with over 5% yield right now, highlighting their performance, potential, and why they might be a good fit for your portfolio. Lumen Technologies, a telecommunications giant, currently offers an attractive dividend yield of around 6.7%. The company provides high-speed internet, voice services, and managed services to businesses and consumers. Despite recent challenges in the telecom industry, Lumen has continued to provide solid returns for dividend investors. The company's strong cash flow from its broadband business allows it to maintain its dividend, which makes Lumen appealing for income-seeking investors. However, potential investors should consider the company's competitive pressures and its focus on debt reduction before diving in. With a high yield, Lumen offers a steady income, but it's essential to weigh its future growth prospects. 9. OneMain Holdings, OMF. OneMain Holdings is a consumer finance company that specializes in offering personal loans. The company's current dividend yield stands at 6.5%, making it an attractive option for dividends-focused investors. Despite the risks associated with the lending industry, OneMain has consistently paid a strong dividend due to its stable business model and efficient cost management. OneMain Holdings has a solid track record of paying dividends and a history of consistent earnings growth, which is crucial for sustaining such a high yield. However, investors should be mindful of the company's exposure to economic cycles and potential changes in credit risk. 8. AT&T Inquiry is a well-known telecommunications and media company with a yield of approximately 6.5%. As a long-time dividend-paying company, AT&T has been popular with income investors. Despite its struggles in the competitive telecom market and the challenges it faces from debt, AT&T remains a favorite for those seeking high yields. The company has made strategic moves to focus on its core telecommunications business, which should provide more stability going forwards. However, investors should be cautious of AT&T's ongoing debt management efforts and its ability to maintain this high dividend yield in the long term. New York Mortgage Trust, NYMT. New York Mortgage Trust, a real estate investment trust, REIT, offers a dividend yield of around 9%. The company primarily invests in residential mortgage-backed securities, which provides it with strong cash flow. However, with a high yield like this, investors should be cautious, as such yields are often associated with higher risks. While New York Mortgage Trust has been able to generate strong returns, the real estate market and mortgage industry are sensitive to interest rate changes. Therefore, while the yield is appealing, it's important for investors to stay aware of market conditions that may affect the trust's profitability and dividend sustainability. Iron Mountain Inc. Iron Mountain. Iron Mountain, a data storage and information management services company, has a dividend yield of 6.5%. The company has managed to remain profitable and pay steady dividends due to its position in the essential data storage and document management market. As businesses continue to digitize and manage large amounts of data, Iron Mountain stands to benefit from this growth. Despite its impressive yield, Iron Mountain is facing increased competition in the data storage industry. Investors should also be mindful of its relatively high debt levels and its ability to continue paying dividends at such a high rate. 5. Ares Capital Corporation, AACC. Ares Capital Corporation is a business development company, BDC, that offers a dividend yield of 9.3%. As a BDC, Ares Capital primarily invests in debt securities of private middle-market companies. This provides high-yield opportunities, but with increased risks due to the nature of the investments. The company has a solid track record of paying consistent and high dividends. Ares Capital benefits from a robust pipeline of investments, offering a stable income stream. However, the risk associated with investing in private companies and debt markets means that potential investors should consider the overall risk appetite and market conditions before investing in Ares Capital. Annaly Capital Management, ANLY. Annaly Capital Management, another real estate investment trust, REIT, offers a dividend yield of approximately 10%. The company primarily invests in mortgage-backed securities with a focus on generating income for its shareholders through dividends. With a high yield like this, Annaly is an attractive choice for income-seeking investors. However, the company is sensitive to changes in interest rates, which can significantly impact the value of its securities. While the yield is impressive, investors should be aware of the market risks and economic factors that could affect the company's dividend payouts and stock price. Altria Group, Altria Group, a leading tobacco and nicotine company, provides a dividend yield of about 8.2%. The company is known for its stable and consistent dividend payouts, and it remains one of the most popular dividend stocks on the market. Despite facing regulatory pressures and declining cigarette sales, Altria has expanded into other sectors, including e-providers and cannabis, which could provide future growth potential. When it comes to building a reliable source of steady dividend history, make it an attractive best options available to investors. However, potential investors should remain aware of the risks surrounding its core tobacco business, including regulatory concerns and declining consumer demand. 2. Omega Healthcare Investors is a real estate investment trust, Omega Healthcare Investment Trust, REIT, that focuses on long-term healthcare facilities. The company offers a dividend yield of around 8%. With the aging population and increasing demand for healthcare services, Omega is well positioned to benefit from these long-term trends. However, as with any REIT, Omega is sensitive to changes in interest rates which can affect its cost of capital and profitability. The healthcare real estate market also faces unique challenges such as regulatory changes and reimbursement rates for healthcare providers. Despite these risks, Omega continues to be a solid choice for investors seeking a high dividend yield. 1. Enterprise Products Partners, EPD. Enterprise Products Partners, a leading master limited partnership, MLP, in the energy sector, offers a dividend yield of around 7.5%. The company primarily deals with natural gas and crude oil transportation, storage and processing. The energy sector is a critical part of the economy, and Enterprise Products Partners has a strong track record of maintaining and growing its dividend payouts over time. The company's ability to generate steady cash flow from its infrastructure-focused business model allows it to continue providing a reliable dividend yield even during market downturns. Investors should keep in mind, though, that the energy sector can be volatile, and any changes in oil prices or regulations could affect the company's earnings and dividend payments. However, with its high yield and solid business foundation, Enterprise Products Partner remains one of the best dividend stocks with over 5% yield right now. In conclusion, the dividend stocks listed here provide attractive yields that are higher than the market average. While these stocks offer strong income potential, they each come with different levels of risk, depending on their industry, business model, and exposure to market fluctuations. Dividend stocks with yields over 5% can be a great way to generate steady income, but it's important to carefully consider the potential risks before making an investment. As with any investment, make sure to conduct thorough research, diversify your portfolio, and align your investments with your financial goals. Always remember that higher yield stocks often come with higher risks, and balancing these factors is key to making successful investment decisions. Thanks for watching. We hope you found this list of the best dividend stocks with over 5% yield helpful. If you're looking for more insightful investment tips and financial strategies, don't forget to hit that subscribe button and ring the bell to stay updated. Feel free to leave a comment with any questions or suggestions for future topics. We'd love to hear from you. See you in the next video, and happy investing.